just want to say that you have recorded a video where you go really deep on this, on the upcoming crash that you say is going to be fast, bloody, and unavoidable. But you also explain how people can position themselves to profit from it. Again, people can watch that video at londonreal.tv/Jim. I highly recommend everyone watch that video. It won't be available on socials.
On 6 o'clock on Sunday, March 12th, 48 hours after the FDIC announcement, the government said, just kidding, the deposits are fine. They did a complete 180 under pressure from the Fed, the White House, et cetera. Even though FDIC did the right thing, legally, they said all the deposits are good, all of them, including my friend's $8 billion and somebody else's $3 billion, et cetera. And then they went further, and this is what I meant, Brian, by the biggest bailout in history. Jay Powell said to every member bank, not Silicon Valley, but every member of the Federal Reserve System, if you have underwater bonds, U.S. government securities, treasuries or certain mortgages, you can ship them to us. We will give you a loan at par value. We'll give you cash equal to par value, even though the loans are only worth 80 to 85 cents on the dollar. Because interest rates have been going up for over a year, the value of the bonds goes down. That's bond math 101. Rates up, bonds down, prices down, rates go down, the prices go up. Well, the rates have been going up, so the prices are down. So these bonds are worth 80, 85 cents on the dollar. But here's the Fed saying, we'll give you 100 cents on the dollar for your 85-cent bond on a one-year loan. So the loan was important because it means they didn't actually sell them. It was collateral for a loan, except you're under collateralized. And the Fed's like, okay. I said, I have a 14-year-old car that my dealer says he won't give me any money for. So I sent a tweet out. I said, hey, Fed, would you give me the $70,000 I paid for it? It's not worth anything, but, let's get back to par here. That's what the Fed was doing for the entire system. But the thing is, Brian, you're talking about multiple trillions of dollars of bonds that fit that description I just gave you. Now, the banks are kind of saying, oh, that's good. That's a good deal. I'll take that. I'll do that myself. Here's something under collateralized. You give me the cash on a one-year low interest rate loan. And now in theory, I've got all the cash I need to, pay depositors if they're taking the money out. But better yet, I don't have to record the loss. See, because I could sell the bonds in the market and get cash and pay my depositors. But the minute I do that, I've got to mark down my entire portfolio. And by the way, those unrealized losses, estimate probably $800 billion in the banking system as a whole. So you've got $800 billion of buried losses. And here's the Fed saying, we'll give you, 100 cents on the dollar, even though your bonds are worth 80. And you don't have to take the loss because it's structured as a loan, not a sale. So this is a multi-trillion-dollar bailout. It's legal in the barest sense, but it's an accounting game. It's a bailout game of unprecedented magnitude. And by the way, we'll get, a year from now, March 2024, they'll extend the loan. I mean,
right.
It's only 1 year. Yeah, exactly.
Right.
You're not going to be able to repay this. Who says interest rates are coming down? We'll see, but they're not going to, they're just extended. So, but this goes back to my earlier point. What else you got in your bag of tricks? I mean, you just guaranteed every deposit in the system de facto. You just guaranteed par value for, trillions of dollars of government securities that are underwater. You just told everybody they don't have to record any losses. You've just given them all the cash that your printer can print with no consequences. But then they go, what else have you got? There's nothing else they can do. And one more twist on this. Remember what the Fed's been doing for the past 14 months. They've been raising interest rates. Yeah, we know that. But they've also been reducing their balance sheet. I run to people all the time. They bang the table. Hey, the Fed's got to stop printing money. They're printing too much money. They've been burning money. They've been reducing the base money supply for over a year, about a year and a half. Well, now, okay, so the base money supply is coming down. Rates are coming up. But what does it mean if $1 trillion worth of bonds show up and the banks delivering the bonds say, give us the cash? Where does the cash come from? The Fed prints it. So now you're going to expand base money by perhaps $1 trillion or more at a time when you've been pretending to reduce base money. So this completely blows up their monetary tightening. Okay, they're not cutting interest rates. That we'll see what happens there, but they are increasing the money supply by, again, estimate upwards of $1 trillion. So what happened to your inflation fighting? What happened to your monetary tightening? And they just want to pretend. I mean, you do have to, you do have to be expert to understand all these mechanics, but they're not that hard to explain. I mean, you can just say it in plain English, which is what we're doing. But from a policy point of view, it completely blows up their monetary tightening.
So Jim Rickards has just recorded a video that's not available to anyone in the public, and he's going to be talking about how this upcoming recession is going to be fast, it's going to be bloody, it's going to be nasty. But at the same time, he's going to show you how you can position yourself to profit from all of this chaos. Now, we've made this video only available to our viewers. Go to londonreal.tv/Jim. Watch that immediately. I can't say enough good things about Jim Rickards. He understands the global economic system better than any guest I've ever had on London Real. His predictions are almost uncannily true, and you can learn how to profit from his vision, from his expertise, and his understanding of economics. So go to londonreal.tv/Jim or click the link below. It's an excellent, excellent look on what's going to happen in the future and how you can position yourself to profit from that. Jim is one of the best in the business, one of my favorite guests on London Real, and he's very, very good at predicting the future and showing us all to profit from it. So click the link, and I hope you enjoy. Hey, it's Brian Rose, founder of the DeFi Academy. I've told you my 4-week crypto bootcamp is amazing, but don't take my word for it. This is what my students are saying.
The DeFi Academy was an amazing experience for me. It took me totally out of my comfort zone.
In this course, I was challenged, I was held accountable, and pushed to do things that honestly weren't always easy.
It's been phenomenal, and I can't believe we're already up on our 4 weeks. It has flown by.
Going through this DeFi accelerator by far was one of the best courses I've taken.
You do this course, you really get into the nitty-gritty of the activities that will make you comfortable with decentralized finance.
Thank you so much to Brian and everyone at London Real and the DeFi Academy for even putting together an amazing course like this.
Anybody else that wants to do it, please sign up. It is well worth the money.